What if I told you the federal government is slowly stepping away from student lending? And this is all because of the big, beautiful bill. You see, this bill could cost so many families thousands and thousands of dollars. And a lot of people who are going to grad school might need to reconsider. You see, the programs that were once helping millions of people is now disappearing. And what's happening is a lot of these private lenders are coming into play to provide services for those who are not going to be eligible anymore for federal student loans. So in this video, guys, all I want to do is just give you guys the facts. I know so many people are talking about no taxes on overtime, no taxes on tips. A lot of the social services are being cut. They're about to come into play on January 1st, 2026. So the big, beautiful bill passed, the new tax and spending law. It's in play, guys, and the changes are going to happen on July 1st, 2026. And the changes really is all about the federal government putting a cap on the amount of money you could get from student loans. A lot of people like it, a lot of people hate it. And also the changes of the income-based plans, the SAVE and the pay as you earn, that is changing as well. Now, as far as for the caps, it's $100,000 for graduate students. A lot of people are saying $100,000 is still a lot of money. You should not spend more than $100,000 to go to school. And now with the elimination of the economic hardships out there, all those income-based plans, that's being changed. Now we're sticking to the standard payment, the one you sign up for when you get a loan, or a 30-year plan, which is removing a lot of those flexible payment options. Now, what's the immediate or long-term impacts of this big change is graduate students. You see, now that they have $100,000 capped on the amount of loans you could get, 50% of these grad students might now start to look at private lenders, which are extremely way more expensive. The interest rates on private lenders are a lot higher, and getting approved is a whole lot stricter. Now, all along, the big debate has been that private lenders should be the ones stepping up and providing student loans rather than the government. And one of the companies, guys, that already came out and they say they're going to step in for the government is SoFi. So they're already, especially since this bill has passed, to provide all the services out there for people who are maxed out with the federal funding. But here's the problem. A lot of these private loans, and you definitely need to pay attention to this, is all those income-based repayment plans is non-existent in the private sector. Now, it would be nice if they do have some services, but I truly doubt they're going to be as generous as the federal government has been. So the SAVE and the Pay As You Earn program has been changed tremendously. Now it's only two size fits all plan. The first one is a fixed payment schedule, which I said earlier is just a regular scheduled payment. That's it. So if you had a 15-year loan and you already agreed to the payment, that's the payment you pay to pay it off in 10 to 15 years or whatever you agreed upon. And the next one is a 30-year plan where it's only a minimum of $10 a month. But I have to say this, if you are an existing borrower, there has been so many changes as well that can impact you now, especially once you start making your student loan payments. So for anyone who had a loan pre-July 2014, your payments are capped at a 15% discretionary income. But for anyone from July 2014 to July 2026, you will be capped at 10%. So now you know what your payments are, but there is something else that you definitely need to pay attention to. It's the reduction of the protection you have, especially when you go through financial hardship. You see, the economic hardship or financial hardship will be completely wiped out in July 2027. So now if you lose your job or you're just struggling financially, there is no more protection for you. And forbearance has been limited. It has been capped for only 9 months within a 24-month period. So as you see, overall, your safety nets will be completely removed. So what's the rationale behind all this, right? We all know it's a huge controversy with people discussing about student loans and how unfair it is. Number one is the fact of it takes the risk away now from the taxpayers. And that's exactly how the proponents of this bill feel. Now it feels like you're putting a burden now on the colleges to reduce the costs rather than having all these loans unlimited for people to get and end up in massive amount of debt. Now the critics state that this would now cause a huger burden on the private lenders, which is extremely expensive. And it would drive out the middle class and graduate students. And also, they feel like this will worsen the inequality of higher education. But now you know what the bill is about, guys, but listen, you need to find ways to pivot and be way more strategic when you're going to college. Community college right now is the #1 option you need to look at. It's 1/3 of the cost of going to university. I know here in Florida, you go to community college for 2 years, and then after that, you automatically can enroll into a university. You will cut your costs tremendously if you choose that route. Staying in your parents' house rather than boarding and making school so expensive, guys, that's an option that you certainly need to look into. And also in this bill, which I failed to discuss, is they are expanding the Pell Grant to trade schools, only if you go full time. That shows you right there that there's a policy shift trying to push people away from going to university and expensive ass colleges to start going to trade school. Because as we know, in trade school, you can make a whole lot of money paying less in education. So guys, let me know what you think about this bill. Do you feel like this bill is going to help the middle class and the poor? Or do you feel like this bill was, well, something that was necessary and needed to be done? Because student loans is crippling so many people and changes need to be made. Drop a comment down below and let me know what you think. At the same time, hit the like, leave a comment, and subscribe. Catch you guys on my next video. Peace.